A new report from KPMG says Canada's nation-building agenda and favorable business environment is expected to spur mergers and acquisitions activity in the coming year. The report says about a third of businesses are planning to make a major acquisition. And so here to tell us more is Marco Tomassetti, president of KPMG Canada Corporate Finance. It's good to have you join us. Thanks so much.
Thanks for having me.
This is very interesting. I think to start, can you just tell us what you think businesses like about Canada's business landscape right now?
I think in general, interest rates in Canada have come down since we saw the heights in 2023. I think directionally they're quite stable, more towards a kind of a long-term norm. And I think there is a lot of capital available in Canada, both from Canadian sources as well as outside sources. So I think the environment from a kind of a big macro perspective sits well for M&A. And then toppled upon that, I think I think in the early part of last year, we discovered that our trade relationships with the U.S. may have actually changed. It wasn't just rhetoric. When the tariffs were announced, it became very real for businesses. So I think as a result of that, what you're seeing is entrepreneurs who are very resilient, seeing a lot of fog in their front windshield if they're trying to think about the future of their businesses. So they need to look for innovative ways to grow organically and to continue to grow their business, to provide opportunities for their people, just to continue to grow. And I think when you think about that, that kind of sparks, well, what do we do? So I think doing acquisitions amongst Canadian to Canadian firms makes a lot of sense. And I think when you layer on top of that, the kind of agenda that we have in Canada for significant projects, major projects funded by government and otherwise, or if you think of some of the data center type investments for the kind of AI value chain that are coming down the pipe in Canada, what you're going to see is a lot of capital flowing into Canadian companies and Canadian projects. And when you think about that, those projects aren't made in isolation. So those projects require components, they require skilled labor, they require a bunch of technical expertise. So you think of the engineering firms, the electrical contractors, the HVAC businesses, all these ancillary business services that surround these projects. And for the most part, with the size and scale of these projects, you can see how it may be difficult organically to build up the capacity to deliver as a supplier to those projects. So I think that naturally will, and we're already seeing it in the market today, that'll naturally spark kind of M&A activity where companies have to buy capability and buy scale in order to serve these projects that are coming down from all this investment.
You mentioned Canadian to Canadian acquisitions, like a Canadian company acquiring another Canadian company. Is that what we're seeing the most of? Like when we say the report says a third of businesses are planning to make a major acquisition, is that mostly Canada to Canada? Because we have seen some foreign acquisitions as well of Canadian companies.
Yeah, so I think in that the report there is for Canadian docile companies. What are their intentions? And their intentions are a third of them to make acquisitions, which historically that's a pretty high number that we've not seen in the past. And so I think what that's going to spark is there will be some Canadians buying U.S. assets, partially to kind of counteract that trade, if you will. But I think the majority of those transactions the intention will be buying Canadian to Canadian targets. And so think about, again, building capacity or building expertise on top of what they have today.
Got it. If we're talking about certain sectors that we see the most M&As happening in over the next year, is there a certain sector?
Yeah, I think it's in the mid-market. It is broad. There are unfortunately some sectors that are really impacted by tariffs, and as I mentioned earlier, it's really hard to acquire things when you can't really predict cash flows, what they're going to be in the future. What I say when it's foggy in the windshield. But I think there are a number of sectors around infrastructure, whether it's engineering, whether it's electrical contractors, HVAC type systems. A lot of those companies we're seeing more and more activity. And then you also see things like healthcare, which there's a lot of activity historically in healthcare, and we think that will continue going to 2026 and beyond. And then, of course, a lot of activity around the whole AI trade scenario where there's so much buzz around AI, but so much infrastructure being built. We will see a lot of kind of software type transactions, which we've seen a lot of over the last while. There's a lot of capital flowing into those sectors.
From what you're hearing from businesses too, is there concern about the CUSMA renegotiations that we're going to be seeing later this year?
There definitely is, and I think what we really saw that last year when we all realized that the tariffs were going to be real. They weren't just kind of rhetoric. And that caused a lot of M&A activity to really slow down, and a lot of deals got halted and stopped. But from there, entrepreneurs are pretty resilient, and they kind of move forward. I think in some industries where there is a real threat of tariffs, then you will see a slowdown in those kind of sectors. But we're also seeing more structure in deals. So, for example, if I'm looking to buy something and there's a threat of tariffs, I might put some of that value into an earn-out type structure so that I have some protection if there are some risks in the future. So I do believe that the macro conditions are strong, the capital investment strong, and we're seeing a pretty strong start to 2026. So we continue to believe that there's going to be a lot of activity and that entrepreneurs will kind of see through and see around the tariffs by either expanding where they're looking to grow their businesses, or just finding innovative ways to access clients or customers in the U.S.
Okay, that was Marco Tomassetti, president of KPMG Canada Corporate Finance. Appreciate you joining us today. Thanks so much for the information.